This is Amandeep Saini and I give my sincere thanks to Farmer Union who gave me opportunities to speak on behalf of Indian farmers who were protesting for the last almost 1 year. So let's go into the deep. More than 60% of India's 1.3 billion people still depend primarily on agriculture for their livelihood. Through the sector accounts for only about 15% of the country's economy output. Their reliance has only increased after the coronavirus pandemic badly struck the urban economy and sent millions of laborers back to their villages. For years, debts and bankruptcies have been driving farmers to high rate of suicides. So the anger against the three central farm legislations have been simmering since September. Thousands of farmers from Punjab, Haryana, Rajasthan and Uttar Pradesh have been marching toward the national capital and are nearing the borders. After failing to garner support from their respective state governments, the farmers have decided to mount pressure on the union government, due to which they are coming to Delhi. While BJP governments in UP and Haryana have failed to convince farmers, governments of Rajasthan and Punjab have extended full support to their agitation. Farmers want the union government to either withdraw the three legislation or guarantee them the minimum support price MSP for their crops by introducing a new law. The demonstrators are demanding that Prime Minister Mr. Modi repeal recent farming laws that would minimize the government role in agriculture and open more space for private investors. The government says the new laws would unshackle farmers and private investment, bringing growth, but farmers are skeptical, fearing that the removal of state protection that they already consider insufficient would leave them at the mercy of greedy corporations. What are three bills of farming government want to impose on farmers? The first one is the Farmer Produce Trade and Commerce Act. The drawback of this bill is state will lose revenue as they won't be able to collect mandi fees if farmers sell their produce outside registered APMC market. And the second one is if entire farm trade moves out of mandis, the commission agent in state will lose their businesses. The third drawback is farmers are not trained electronic trading and thus they shall be highly prone to frauds. The second bill is the Essential Commodities Amendment Act, and the drawback of this bill is farmer in contract farming arrangement will be weaker player in terms of their ability to negotiate what they need. And the second drawback is it will affect the small farmers as many sponsors may not like to deal with a multitude of small and marginal farmers. The third drawback is being private companies, exporters, wholesalers, and processors, the sponsor will have an edge in entire dealing, including in disputes. The fourth drawback is farmers who don't know to read and write. Chances are they are might be get exploited by the sponsors. The fifth drawback is if the dispute doesn't get resolved within the timelines provided in this bill, then it will be the farmer who will be most affected. The sixth drawback is it may give rise to cash crop and corporates will call the shots. Ultimately, subsistence crop will take a beating. And the last bill is the Farmer Empowerment and Protection Agreement on Price Assurance and Farmer Service Act. The drawback of this bill is price limits for extraordinary circumstances are so high that they are likely to be never triggered. And the second drawback is big companies will have the freedom to stock commodities. It means they will dictate terms to farmers which may lead the less price for the cultivators. So eventually I want to say that the government should listen to the farmers and solve their problems as soon as possible. Farmers deserve respect because they provide us food. And the government is from the farmers, not the farmers from the government. Thank you.